Hello, viewers, and welcome again to another episode of the Top Notch Coaching Network. My name is Still Confidence, and today we're going to be looking at a series we already started. The first of this series was the vehicles of investment for beginners, and in that vehicle of investment for beginners, I promised that I would try to break down some of the vehicles of investments that I itemized in that video. And so today I want to talk about deposit um, the fixed deposit. It was among the investment vehicles I mentioned in my past video, and I did say that it was a low risk investment vehicle. And for beginners who do not know what a fixed deposit is, a fixed deposit is like a product. It's also called um, time deposit or term deposit, depending on the country. Some countries call it fixed deposit, some call it time deposit, and some call it term deposit. And what is it all about? It's simply you locking your money, locking your money for a period of time, basically between 30 days to 2 years. You understand? And the good thing about FDs is that the risk is very low and your interest is guaranteed, because when you fix your money for those for that 30 days or 1 year or 2 years or 6 months, they pay you guaranteed interest. So the interest is guaranteed, and that's why it is called a low risk investment. Today what I want to do is to compare this fixed deposit interest rates across three countries. I'm talking about fixed deposit interest, the return on investment in your fixed deposit when it comes to Nigeria, the US, and the UK. So I want to do a comparison so that I can help you see how to invest your money as a beginner. So we are going to start with Nigeria. Most Nigerian traditional banks, not the fintech banks, traditional banks, their interest rate for FDs is basically from 9% to 13%. 9% to 13%, and it depends on the bank. Then for the US, their interest rate for FDs is basically from 4.5% to 5.5%. Then for the United Kingdom, the interest rate is from 4% to 5.5%. And like I would say, it varies with banks. It varies with the banks. Now, having looked at the fact, having seen that Nigerian banks pay higher rates when it comes to your fixed deposit, when it comes to the returns on your fixed deposit, there are some things you also have to know. You also have to look at the inflation rate of your country against these other countries. For instance, let's look at the inflation rates of these three countries that we are comparing. Nigeria, as at 2025, as at the time of making video in June 2025, Nigeria's inflation rate is over 20%. Then the US inflation rate currently in 2025 is at 3.5%, 3%. Then for the UK, their inflation rate is currently at 3.5%. Now, as an investor, what does this portend? It helps you to see that even though Nigerian banks pay higher interest rates, that the interest rate still comes out negative because of inflation. So inflation eats into the return on your investment for your fixed deposit. So, but for the UK and the US FDs, you can see that they offer greater stability and currency strength. So what does this? So in a nutshell, we've seen that FDs are good for saving money, but they are limited, especially when it comes to time value. They are limited. They are good when it comes to saving for the purpose of disciplining yourself to save. You know, I told you in the first video that you have to know what are you investing for. Is it for the short term or the long term? So that's why I listed the fixed deposit as one of the investments you can do, but basically for the short term. Then another thing we understood from this thing is just that FDs are basically good for just savings. It is not a vehicle for wealth creation. It is not something that grows money. You can only save with fixed deposit. You can't grow money with fixed deposit. That is why it's a low risk vehicle. So now, as an investor who is just starting his or her journey into investment, how do you take advantage of the how do you mitigate against the inflationary rate of your country and still take advantage of the strength of the currency of other countries that you might be interested in? So this is what I always suggest, and this is what I do. Diversify your investments. Diversify. So save in your currency and also save in dollar. You know, it is easier these days because fintech banks have come in and made things so easy. And interestingly, apps like Bamboo, Piggyvest, which I use Piggyvest actually, Piggyvest, then Carrywise, Thrive or something like that. They pay better in terms of even interest rates. But then another good thing is that they now have they have a place where you can save your money in dollars. You fix your money in dollars for a particular period of time. Though the interest rate is not as high as when you are saving in naira, but when I tried it with Piggyvest, I took my naira and converted it to dollar and saved in my dollar account. I think dollar then was at 700 naira, but by the time I unlocked it a year later, dollar was at 1,004. Yes, I think 1,400 in naira. So you could see the difference. So if you want to take advantage of this as a beginner, you can download apps like Bamboo, Piggyvest, Carrywise, and then Rise, things like this, and save in your currency if it is in your country, and also convert some of these currencies and save them in the dollar part of the savings in the section there that allows you to save in dollar. That is the only way you can take advantage of saving in other in currencies that are stronger than your currency, and at the same time mitigates against the inflationary rate of your country's currency. So I believe this is self-explanatory enough. So when I come in the next week, I'm going to also talk about the mutual funds. This time I'm just going to I think we still have the government bonds to talk about as one of the low interest low risk investment vehicles. So the government bonds is one of them. So I will discuss them. I will research and see the ones that are currently available and also let you know about them. On the other hand, keep watching and keep subscribing if you're getting value. See you in our next episode.